Remember, not your keys, not your coins. So today we're going to look at three so-called centralized lending platforms within the cryptocurrency space whose decisions not only risk the livelihoods of people that trusted in them, but also risk taking down a whole network, or at least denting the reputation of one of the biggest decentralized networks in the world. So make sure you stay tuned for the whole video, because what you're going to learn today is extremely important and will help you navigate the cryptocurrency space, or rather investment in general, as we move forward. So make sure you stay tuned for the whole video. So let me just quickly go through these headlines here to show you what these articles are about before we go into the meats of these details. So DeFi, which is decentralized platform. So the DeFi contagion fears and rumors of Celsius Network, which is one of the platforms. 3 Arrows Capital, the second one. Insolvency could weigh on Nexo, which is a third one. So the Nexo's price as well. Then we're also going to look at this one, which states DeFi contagion, analysts warn of staked Ether depegging from Ethereum by 50%. And what else we're going to look at? Su Ju's cryptic statement as rumors swirl of 3 Arrows Capital liquidations and insolvency. Guys, remember what we're going to look at today is going to look at, it's also tied into Ethereum, the Ethereum merge, because Ethereum is trying to create this proof of stake thing, is trying to merge so that it moves on to the proof of stake standard, because I guess proof of work isn't working so well for them. So essentially, many of these platforms, if Ethereum isn't able to do this on time, apparently that risks a lot of money and a lot of, basically it's not a good situation. So since I'm not an expert in collateralized debt positions, I want you to understand what is going on through these well-written articles by Cointelegraph. Of course, not a sponsored video, but of course these guys do amazing research, guys. DeFi contagion fears and rumors of Celsius and 3 Arrows Capital insolvency could weigh on Nexo, which is the other decentralized platform that's within this. So Nexo says it currently has no exposure to 3 Arrows Capital and has 100% liquidity to meet its debt obligations, which they have on the site, which is, I guess, an analysis done by another company showing that indeed they have 100% collateral backed for this liquidity or liability. So in other words, their customers' money or their users' money. So they're showing that they're backing it up, so they're not going to be affected by this. But anyways, the price of Nexo, their token, continued to fall on June 15th as crypto lending firms continue to be shaken by the falling cryptocurrency market. Meanwhile, Nexo has denied rumors of exposure to 3 Arrows Capital, a Dubai-based crypto fund facing insolvency risks. Nexo price suffers a DeFi contagion fears. Nexo, which serves as a security token at a cryptocurrency lending platform of the same name, fell nearly 25% to 0.6 or 61 cents a unit. So its lowest price reading since January of 2021. The massive intraday decline came as a part of a broader downside move this week, which stretched Nexo's losses to 40%. So an ongoing contagion in the crypto lending sector contributed to Nexo's underperformance. Traders fear that the most decentralized finance DeFi, or rather centralized finance firms, which offer high yields to clients on their cryptocurrency deposits, will default on their debts due to the wipeout of nearly 1.5 trillion from the cryptocurrency market in 2022. So the concerns continue to mount after the collapse of Terra Luna. You all heard of that horrible situation, now known as the Luna Classic, a $40 billion algorithmic stablecoin project in May. So that $40 billion wiped off. A month later, Celsius Network, which offers clients up to 18% yields, paused withdrawals due to extreme market conditions, in quotes. Its clients have pulled almost half of their assets out of the platform since October of 2021, thus leaving it about $12 billion as of May 17th to meet debt obligations. I am definitely rooting for Celsius Network, this is a quote, to get liquidated. I am definitely rooting for Celsius Network not to get liquidated. Whoa, I'm surprised by that. Okay, not to get liquidated. That is customer money and, well, I'm not going to say that word, the funds who are hunting this stop loss. So of course, as this is happening, some people are looking for stop losses so that the liquidation happens so that they profit from this. So this person saying, he's one of the famous influencers out there, crypto influencers, he's saying this should not happen. Of course this should not happen. So meanwhile, 3 Arrows Capital, a crypto hedge fund, has witnessed liquidations of at least 400 million. In addition, on-chain data reveals that the firm may also have a minimum debt of 183 million against a collateral position of 235 million, derived in staked Ethereum. So those that do not know, you stake Ethereum as you prepare for the merge, proof of stake merge, and in return you get these synthetic tokens that mirror a one-to-one of the actual Ethereum, which are depegging, so they're no longer mirroring the price of the actual Ethereum. So the addresses use the USDT or USDC pair to repay the debt and withdraw the Ethereum, and then convert that Ethereum to USDT and USDC through a sign of Fetch.eth and repays it, and so on. In almost 24 hours, the address has sold about 50,000 Ethereum, and that can be checked for proof over there. So the fund could transfer the economic risk to its lenders if it becomes insolvent. The lenders will bear the profit and loss difference between how much they are owned versus what they get in liquidating their collateral, noted Degen Trading, a market commentator known for highlighting the Celsius network's liquidation issues. And in quotes, that means default will cause significant equity erosion. Not all lenders are made equal. Celsius is the worst. It has gone under. Nexo, I don't know. Blockify, that's another one, is pretty bad as well. So however, Nexo says it currently has no exposure to 3 Arrows Capital despite partnering with the fund over a non-fungible token lending platform product in December of 2021. The firm asserts that the partnership with 3 Arrows Capital did not take off. And in quotes, all Nexo has done with 3 Arrows Capital is sign a partnership and so on. They're trying to defend themselves, push themselves away. What's next for the Nexo token? Nexo has 100% liquidity to meet its $4.9 billion worth of debt obligations, according to US-based audit firm Armanino. So that raises the firm's potential to avoid a liquidity crisis in the event of a rising withdrawal rate, unlike in Celsius. So nonetheless, Nexo price treads ahead under the persistent bearish risks, primarily due to the crypto market's dire state in a high interest rate environment. The Nexo USD pair now eyes the 58 to 69 cent range as its interim support due to its historical significance from December 2020 and so on. So a rebound from this, they're talking about the price. So conversely, a decline below, and they're going to talk about the price. So you know the players that are involved. And we showed you the proof here of they're claiming that they have the assets backed. So we're seeing the whole point of this. We're seeing these main centralized platforms, Celsius Network, Nexo, Blockify, Celsius, all under risk. I remember these are centralized lending platforms. Similar issues, or at least some sort of issues, have happened to other decentralized platforms, but some have tried to mitigate these issues in the best way they can because it's their customers borrowing the money and lending the money. It's not these, in this case with centralized platforms, you give them your money and they do whatever with it. So like a hedge fund of some sort. So which means they are 100% liable of what the heck is going on. So, DeFi contagion analysts warn of staked Ether depegging from Ethereum by 50%. Liquid staking firm could default on their Ether obligations if the merge does not happen, guys. That's really scary. The next big crypto crash could be around the corner due to Lido, one of the other bigger decentralized platforms where you stake your Ethereum to prepare for this proof of stake merge. So, due to Lido staked Ether, or STETH, a liquid token from the Lido protocol that is supposed to be 100% pegged by Ethereum's native token. So notably, the STETH peg could drop against ETH by 50%. That would be too big in the coming weeks, raising the risk of a DeFi contagion as Ethereum moves towards proof of stake, argues popular Bitcoin investor and independent analyst Brad Mills. So over 1 million Ether liability risks default. That's a lot of Ethereum, guys. So in detail, investors deposit Ethereum in Lido smart contracts to participate in the merge, a network upgrade aiming to make Ethereum a proof of stake blockchain, also called the Beacon chain. As a result, they receive STETH representing their staked Ethereum balance with Lido, which is the decentralized exchange. So users will be able to redeem STETH for unstaked Ethereum. So if you unstake your actual Ethereum, well, if you stake your Ethereum, you get this STETH and you should be able to recoup your original Ethereum when the Beacon chain goes live. So the Beacon proof of stake chain goes live, you should be able to get your original Ethereum. That is the idea. So in addition, they can use STETH as collateral to borrow or provide liquidity using various decentralized finance platforms to earn a yield, just like proof of stake, how we've been doing it, essentially lending, borrowing with these decentralized platforms or exchanges. But if the switch to Ethereum 2 gets delayed, this could cause a massive liquidity problem across DeFi platforms. Mills asserts using Celsius Network, which is a centralized platform actually, a crypto lending platform that offers up to 17% annual percentage yield as an example. If customers start withdrawing from Celsius, they will have to sell their synthetic ETH, Mills explained. So Celsius has liabilities of 1 million Ethereum, not dollars, Ethereum. So 288,000 are inaccessible until the merge happens. These people cannot have access to the Ethereum. We've seen some of these spillovers into decentralized platforms, and it's unfortunate, but to see some of these big exchanges or centralized platforms, it's pretty bad. So 30,000 are lost already. 445,000 are synthetic Ethereum. So if it depegs, essentially it's not really there. And 268,000 are liquid. Could cause a run. So regardless of unverified rumors that Celsius could be insolvent, the best way to secure your funds is to control your own private keys, guys. I hope this is the last time I have to say this. Not your keys, not your coin. We've said this in the past. Andreas Antonopoulos, the educator, has said this in the past. It's better not to learn things the hard way. Synthetic ETH might not depeg, but the risk of DeFi contagion in a crypto bear market is extremely high. Contagion risks. Moreover, even centralized yield platforms could face insolvency risks due to their ETH liabilities, argues market commentator Dirty Bubble Media and so on. So Swissborg, and then they go on to talk about this, but you get the general idea. Okay, let me quote this strange quote over here. When there's a deep liquidity and potential to arbitrage, quants, Wall Street raccoons, and flush boys will milk the yield. When the strategy goes against them, they will mercilessly sell pressure. So what that means is that these people want to be over leveraged or under leveraged, and when things are failing, they don't mind dumping all their Ethereum or their tokens on the network. They don't mind who they affect because they're there to just make profit. But if you control your own keys, your own coins, if you trust in the network, if you've done your own research, then you shouldn't be affected by these things. So it's extremely important to watch out for these centralized networks that are trying to take over a decentralized ecosystem. I hope we make our point clear, guys. So Suju's cryptic statement as a rumor swirl of 3 Arrows Capital liquidations and insolvency. This is the last article we're going to look at today. We are in the process of communicating with relevant parties and fully committed to working this out, Suju stated. Now guys, this is going to go crazy. Suju, co-founder of Singapore-based crypto venture capital firm 3 Arrows Capital, has put out a cryptic statement on Twitter in response to swirling rumors that the company is battling against insolvency. We're going to see some shady stuff he's doing as well. Online chatter about 3 Arrows Capital being unable to meet a margin call began after 3 Arrows Capital stated moving assets around this week to top up funds on decentralized finance platforms such as Aave to avoid potential liquidations amid the tanking price of Ethereum during this week. So there are unconfirmed reports that 3 Arrows Capital faced liquidations totaling hundreds of millions from multiple positions. DeFi banking platform Celsius has also been frantically shoring up positions to avoid liquidations. Celsius funds account for a significant proportion of the total value locked in various platforms in DeFi ecosystem, while 3 Arrows Capital is a major borrower. So the collapse of either or both would have significant implications of the entire space, guys. So this wallet tagged as 3AC on Nansen has been aggressively paying back Aave debt against its 223,000 ETH or $264 million position to avoid liquidations, with $198 million in borrowings against it. At 85% liquidation threshold, a negative 11% move in Ethereum to 1,042. Remember guys, as these prices fall, as Bitcoin falls, they're these over-leveraged institutions that have their people's money over leveraged. If this happens, let's hope the prices don't collapse, because it's not just the prices that will just collapse. At least you hold on to the tokens. If you're liquidated, you have nothing. You don't have the tokens. You're left with nothing essentially. So in a short and sweet Twitter post from earlier on June 15th, I'm probably mispronouncing the name, broke his silence after around 3 days of inaction on social media and suggested that the company is working through its issues. We are in the process of communicating with relevant, in quotes, we are in the process of communicating with relevant parties and fully committed to work this out. Messari Crypto's Ryan Selkis highlighted speculation that 3 Arrows Capital started to reposition its balance sheet after being on the wrong side of 2 synthetic trades. So with size in Bitcoin and synthetic Ethereum. So this is GBTC and we have synthetic Ethereum. So these are mirrors of the actual cryptocurrencies, but they're not the actual cryptocurrencies. So Wu Blockchain also reported that the firm lost around $31.7 million through trading on Bitfinex during May. Guys, you know trading is a risky thing. So according to Bitfinex's leaderboard, 3 Arrows Capital lost 31,370,000 and some in Bitfinex trading in May, ranking second. The account lost that much on Bitfinex this year. So in June, the account was not recorded, but losses on a single exchange may just be hedged. The rumors ramped up after Zhu removed all mentions. Guys, this is a shady part I was talking about. He removed all mentions of investments in Ethereum, Avalanche, Terra Luna, Solana, and Nia protocol, which are some of the main protocols talked about, touted in the cryptocurrency space, and Mina protocol as well. DeFi and non-fungible tokens, NFTs from his tweet. So he removed all this stuff, keeping only a mention of Bitcoin. Others have raised questions about Su deleting his Instagram and asked why both he and co-founder Kyle Davis were inactive on Twitter for 3 days. Guys, if you go check out the Twitter, you can actually see this evidence here. And I think it's actually linked here. We're going to, let me see if I can open it up here. Okay, as we wait for that to open, we have 3 Iris Capital in trouble. Rumors swirling, Kyle and Zhu haven't tweeted or liked anything in days. Zhu took every coin and hashtag out of his bio. I think it has opened here. It's right here. And if you open this, you can see that he took out the Ethereum, IVAX, Luna, Solana, Nia, Mina, DeFi, and only left Bitcoin. Not good, guys. Not good. Not good form. An hour ago, they dumped 30,000 synthetic Ethereum and reduced all Aave positions. Wow. So, in the last part, concluding this, a related issue in 3 Arrows Capital's previous exposure to the Terra ecosystem via the Luna Classic, which experienced a multi-billion-dollar market crash in late May. The platform exchanged roughly 500 million worth of Bitcoin with the Luna Foundation Guard. So these, for the equivalent fiat amount in Luna just weeks before the Terra imploded. So these are the guys that did this. Wow. So other prominent figures in the space, such as the former head of crypto, Cathie Woods, ARK Invest, she's the head of ARK Invest. Chris Buniskey also pointed out to rumors of 3 Arrows Capital being the next farm to crumble after Terra and Celsius network. Alameda Research was also loosely referenced via a meme, and you can check this out. Well, one of these 3 is down and one doubt will fall, but the other is something to watch. And I guess they're talking about this. Probably 3 Arrows Capital. So in a related issue is 3 Arrows Capital's previous exposure. We've looked at that. That Terra Luna thing was not a good thing. So guys, this is the situation that is going on. We're looking at 3 Arrows Capital. We're looking at a DeFi contagion of the contagion, which might spread over of these synthetic assets, which don't have proper price feeds and over leverage in the market. And we're seeing some of the other centralized platforms crumbling due to mismanagement of farms. So to conclude this video, make sure you do your own research. Make sure the platforms they're using are really respecting decentralization, and you can control your resources in the best way that you can, or you can control your resources because you sign the transactions. Make sure you have a Web3 wallet. Make sure you can control your assets. I don't know what other way to explain that. All right, guys, I hope you learned something, and I hope things turn out for the better in the end. And I'll see you on the next one. Take care. Bye-bye.